Hi guys, and in this video we're going to discuss different types of orders. Now we'll cover the different types of entry orders, the different types of exit orders, and example trades. There are a few different ways to get into and out of trades, basically entry orders and exit orders, and various types of entry orders being market orders, orders that are carried out right away, and pending orders, orders that are set in advance before price reaches a certain level. Exit orders consist of closed trade orders, stop loss orders, and take profit orders. So let's cover some different types of entry orders. Market orders are basically buy and sell orders. And pending orders involve a stop order to buy or sell, or a limit order to buy or sell. Now, these orders allow you to enter a trade instantly at the current market price. If you want to get into a trade right now, you'll use the market order. You may choose a buy market order or a sell market order. Entering a market order is usually as simple as clicking a buy or sell button on your trading platform. Pending orders are orders that you place on your platform that are not entered instantly like a market order. They could consist of, for example, a stop order. A stop order is placed ahead of the current market price. A buy stop order is an order to enter a buy trade. Use a buy stop order when the market has not yet reached the place you want to enter the trade. So let's have a look here. Price will start off, for example, with a buy stop order being under the buy stop order and will have to rise to meet your entry. Once it hits that point, the market is entered. The sell stop order is exactly the opposite, basically, and it's used when the entry is below the current market value. Price will have to drop down from where it is to your desired entry level. If you are entered into a sell stop order trade, you want the market to continue moving lower to make a profit. So here, for example, price will start off being above the sell stop order and will have to decline to meet the point of entry for your sell stop. Once it does, you're in the market. Limit orders are also pending orders, but are used when you want the market to hit a certain price and then change direction. This is used frequently in range-bound market, a market that is bouncing up and down within a defined high and low range. And a buy limit order is used to get into a buy trade. So let's have a look here. The market has to initially be moving downwards, hit your entry price, and then make profit price move back upwards. So you enter a buy limit from above. So once it hits that level, you're in the market and you're going long. The sell limit is exactly the opposite. You will be taking a sell trade, but the market has to approach your entry level from below, and that's how you enter the market, as you'll see on the image. Exiting a trade is just as important as entering into one, and we have what's known as a closed trade order. Like a market order for instantly getting into a position, you can simply close the trade to get you out of the position. Closing a trade is something you have to be present for, and you would do this manually. You can close a trade in profit or at a loss. To get out of a trade at a specific price, no matter if you are there watching the trade or not, you could use a stop loss or take profit order instead. The stop loss order allows you to set the maximum loss a trade can have before closing the trade. A take profit order allows you to set the profit you want to earn before closing the trade. So a stop loss order will always be behind the market. If you are buying, your stop loss will be under the current price, and if you're selling, the stop loss will be above the current price. The stop loss order is used in two different ways, as an initial stop loss or as a trading stop. The take profit order will be placed in front of or ahead of the market. If you're in a buy trade, your take profit will be higher than the current price, and if you're in a sell trade, the take profit order will be placed below the current market price. This order closes your trade once the target has been reached. So let's have a look at an example. Here we can see a take profit level, an entry level, and a stop loss. Stop loss was set below the entry level, and if price had to reverse and move down to the red line, you'd be taken out by your stop loss. And here again, the stop loss is set at the red line, and you'll see the market is moving downwards, but should it have reversed back upwards and hit that red line, you would have been taken out of the trade. That's it for this short video. In more videos to come, and in many of the systems we share with you, we'll discuss these particular terms in more detail also.